So hello everyone, this is Harsh and back with a new education video, and today we are going to learn about swing failure pattern or SFP. So we will understand that how the market makers trail our SL, and we actually lose when we are trailing our SL, we actually lose money, and our SL get trailed most of the time. The reason is behind this is the market makers. The market makers are never making it easy to make you money. So what they create is liquidity in the market. So first of all, let's understand what is liquidity. Then we will understand what is swing high, swing low, and then again we are going to understand what is swing failure pattern. So first of all, we will understand what is liquidity. So in simple words, I would say liquidity is known as the fuel for the market. Like whenever the market do a liquidation or liquidity of most of the retailers, the market start pumping because when if I'm the market maker, I don't want you to make money. I want only I will be the one who make money in the market because I am the market maker. I am having billions of dollars in my account, and definitely I don't want retailers like you and me are going to make money, right? So that's how they create liquidity in the market. So what is liquidity and where is the liquidity? So liquidity are the point where there is a lot of SL. For example, if I'm just telling you, so swing failure pattern is advanced strategy. So before watching this video, if you don't know what is support, what is resistance, and what is order blocks, or you can say point of interest, then you have to understand this before applying this pattern. So I'm just telling you some examples. Okay, so here you can say that this is the supply candle, or you can say point of interest, right? Of the previous candle of this dump, like we are having a breakout structure at this area, and we are having this demand candle right here. All right. So what the one who have learned SMC, what they will do? They will just place a short position here, right here, and where their SL will be. So their SL will be just, for example, they will target this, and their SL will be just above this previous high, right? And they got trailed. They got their SL hunted. They were crying about RR. They are giving MG 10 is to 1 is to 50, 1 is to 10 RR. No, bro, you are getting fucked if you are using SMC, if you are using chart pattern. Everyone has a strategy, but for me, these are scams. Everything in the market is all about support and resistance and all the shit like even the chart pattern, SFP, and EMA, MA, RSI, or whatever indicator there is market is only for the confluence that you can trade. But at the end, it's a game of support, resistance, and supply and demand. Because trading is what? Trading is a game of supply and demand, right? It's not about RSI. If I am buying gold, and I'm selling gold, it's not about I'm seeing that OMG. If I'm going to purchase gold, hello, Mr. Are you having some RSI in your shop? No, I'm just going to see the market demand and I will go for it, right? So that's how it's work. I can use the RSI on the chart if I understand what exactly divergences are, and it can just make it easy for me to yes that I'm more confident where that demand is higher and I can get some profits, right? So all these shapes are scam. So now let's understand. So I hope you all are clear with liquidity. So liquidity is the area where there is a lot of stop losses are. So as or the swing high or the swing lows are the SL hunting point of every retailer. So for example, here we are having this a lot of SMC traders are just having their SL right here and they get hunted, right? After that, the market dumped very good, right? So this is called swing failure. This is called a liquidity grab, and here we have a liquidity sweep of the market. Like you can see, if you mark this high, you can see the market and the candle is not able to close our previous swing high, right? So this is called a liquidity sweep that the candle liquidate the shorters right here by getting their SL100 right here, and after that this market will start dumping, right? Easy. And that now let's understand what is swing high and swing low. Alright, so I'm just telling you what is swing. So when the market is in a trend, for example, if I'm making a higher high and higher low, if the market is making higher high and higher low, right? So these points, for example, this point, this point, this point, all these points are swing high and swing lows. So this is the highs and this is the lows. Alright. So I hope you are clear with what is swing high and swing low. So the recent high of the market you can say is swing high, the recent low of the market or any time, like if the market is trading right here and this is the liquidity area. So I'm just, for example, I'm marking this. So this is the liquidity area and market haven't that. So I can just, yeah, so I will go for it. I will start, if we have a liquidity sweep at this area, I will start looking for longs. Easy. So that's how it's work. But at the end, if you're trading altcoin, you need to see Bitcoin. Bitcoin is the god of every cryptocurrency. Every crypto, 99.9% crypto are just following Bitcoin. So you need to be very careful with Bitcoin price action. Like Bitcoin is its resistance and any alt is a support. Then I'm not going to long the alt. Just because Bitcoin is as a resistance, it will be very risky. So that's how you need to trade this. Now I hope you all are clear with swing high and swing low. Let me show you some live examples on the chart. So for example, the market we are making lower low, lower high, lower low, lower high, lower low, lower high, lower low, right? So what is the recent high of the market? This one, right? So I am looking for so first thing is that I can see a liquidity, the recent high of the market, which is a swing high. Then I need some confidence to enter a short position, right? So I will start looking for something, maybe some resistance or maybe some point of interest. So as I can see here that we are having this resistance zone right here and this demand candle or you can say point of interest right here. So now I'll just have will be having patience. This is my interest area to short and I'm not going to place limit orders. I'm going to do market execution always. That's my strategy. That's it. That's simple. No, I'm not going to place limit orders. I'm not a I'm not, if the market maker don't have limit orders, then why should I have limit orders, right? So that's how it's work. So once I see the liquidity sweep, I will just enter anywhere around this, for example. All right, and if and I will, okay, so this is the swing low, so I will just target this area and my SL will be just above the recent liquidity sweep. So if this is the liquidity sweep, my SL is just above this area and my target will be support and the swing low. The first target will be the support area and the second target will be the swing low area. So swing high, swing low, swing high, swing high. So TP, you can actually TP here, but I don't want to create more. So I'm just taking this profit because if you look at this area, we are also having a liquidity sweep at this area. So I'm not considering this weak, right? So I just that's the easy thing that why I'm not considering this liquidity area because it's the liquidity area for this previous low, right? Easy, simple. So now let's make it short and I hope first of all let's talk about, are you clear with liquidity? No. So let's understand. Liquidity is the area where there is a lot of SL. The retailers SL are where is the lot of liquidity area and the liquidation and the SL are there for the retailers, then that area is liquidity area. The second thing is that the second liquidation area is where at the swing high and the swing lows. There is a lot of liquidity at the swing high and the swing lows. Third point, the we will always enter after a liquidity sweep if you're trading swing failure pattern. Like you can see that this is the swing high and the market is not able to break this previous swing high. So it is a swing failure and we see a dump in the market. Right, it is a live chat. I'm not like screen recording or anything. This is the live chat, you can see it. So second thing is that I will enter after the liquidity sweep. I will wait for the retailers SL to be trailed. Then I'm going to enter at the market execution. Third thing, I'll be looking for a at no matter how much confidence I can, but yes, I will be looking for a lot of confidence. The more the confidence is, the higher probability of the target, sorry, the trade to hit target is, right? Simple. So after that, where we was, so we were at, yes, we will enter after a liquidity sweep. After that, what so we understand when to enter, we understand liquidity, we understand swing low, swing high, and now we need to understand where is the SL and where is the TP. So as I told you before, stop losses, the stop loss will be always above the liquidity sweep area, just above that area. Clear? Now, where is the target? So there will be two targets for swing with a pattern trade. The first one is the liquidity sweep, or you can say the swing low, the recent swing low of the market, and that's the main target. And your second target will be the support area. Clear? I hope you all are clear with this, and I just want to recall one more time, and after that I'm just going to stop the video and upload it on the YouTube channel. So again, I'm telling you, we will we will mark swing high and swing lows. We will mark the support and resistance area. Now we will just wait for a liquidity sweep with previous swing high, swing our swing lows. After that, we will enter the position. Our SL will be just above the liquidity sweep or just below the liquidity sweep if you are entering long position. Our target will be the support or resistance area, and our main target will be the swing low. That's all. That's clear. So this is all about the swing Philip pattern, and for now it's having, for me it's having 95% accuracy so far, but I advise you to risk only 1% of your portfolio in one trade. You can easily make 1:5 RR on an average trade. So it's easy to risk 1% and gain 5% of capital, and that's a good risk to reward ratio, and you don't need to enter high position because it's having high possibilities, because no strategy is for long term, but until it's working, we will print money from it, right? And again, you will be looking for the liquidity sweep. Once you find the liquidity sweep, you will enter at market position and you will do the similar thing. So that's all for today's video, guys. Have a great day, and I hope you understand something. If you still don't understand something, we're having our Discord link in description and our pin link comment. Make sure to join. We are having a community of more than 1,000 members, and I am there, and a lot of traders, experienced traders are there to help you each and every day. If you are a beginner, then this is the best place for you. If you are an intermediate trader, then this is the best place for you. And if you are a professional, then 100% this is the best place for you. We always welcome every trader in our group. So thank you, guys. Meet you in the next one with something new and something more profitable strategies. So have a great day, guys. Happy trading.